Good morning, everyone. Welcome to the weekly shot, No Filter. We have got a great show set up for you today. Tons and tons of guests and tons of content. So I'm not going to slow down at all. I'm just going to dive right in. Here are our two guests for today. We've got Joe Kehrig, who's going to talk to us about what we need to know about the luxury market. What I love about Joe is 3 years ago we had Joe on with what you need to know about the REO market. He's absolutely someone who has a very good skill at determining where the market's headed, to use a hockey analogy, which isn't anything I know much about, but he's good at skating to where the puck is going as opposed to skating to where the puck is. And then we've got Jimmy Sue, who's a broker in the Fremont office, and he's going to help us, and a CPA. He's going to help us get prepared for tax time. So awesome. Super glad you're here. That's great news. Taxes. We love taxes. Right. He's actually going to... No, we're recording this. I won't say what I almost said. So we can't wait for that portion of the show so we can all learn how to pay our appropriate amount to the government or whatever. So let's dive right in. We've got Joe here with us. Joe, you're a man of many talents. You're the manager of our Danville office, one of the top producers. Your team is one of the top producing teams in the company. And as I mentioned in our prelude, you really have, as markets shift, you've been in the business a long time. As markets shift, you're very, very good at determining where they're headed and getting there first or getting there early. So obviously you now are, you've already been a luxury agent, but you're reinvigorating yourself as a luxury agent. Why luxury? Why now? And what's the opportunity in today's luxury market?
Well, Keith, and thanks for having me this morning.
Sure, thanks for being here.
It's funny because in 2005, our average sale was over $1 million.
Right.
And then we went where the average sale was like about $300,000.
Right.
And believe me, we couldn't wait. $1 million sales much nicer than a $300,000 sale.
For sure.
But the thing is you look at the trends, and that's what I really try to study. And there is now in the areas that our offices are in, which are in a lot of high-end areas, the market's going nuts. There's a lot of money out there, and there's a lot of money sitting on the sidelines. There's a lot of money, and the great thing about this company is building the network that we are with China, because there's a ton of money coming from China into the Bay Area. In our area, the East Bay, Workday just went, public, and we've already sold 3 Workday employees homes.
Right, and they're looking for bigger ones.
Yeah, and they were going from renting to $1 million plus overnight.
Dang it.
And yeah. I wish I would have known.
I mean, congratulations, but dang it.
But they have 1,000 employees, and they're planning on 3,000.
Right.
So in most of our markets, the market is just ripe. And what people don't understand is, selling the $1 million plus homes, it's more of a mindset than anything else. Because I'll tell you, it is easier to sell $1.5 million home than a $300,000 home. The
buyers qualify better.
The buyers qualify. The sellers are more educated.
Homes in better shape.
Exactly. So it's actually easier. It's more of developing a mindset that makes you comfortable in that price range.
So we're already off script, which is classic Keith, so hopefully everyone's all right with that. But talk about that mindset piece. Let's say, talk to me like I'm a brand new licensee, or I've been in the business for 2 years. I've sold some houses, but I've never done a deal over $1 million. And we're sitting down, we're having a cup of coffee, and I say, Joe, I want to crack into that market. You tell me it's a mindset, and I believe you. So what's that mean? How do I re-brain map myself so that I feel like I could really go after that $1 million, $1.5 million listing, and it's not BS. I'm not just, if I think good thoughts, good things will happen. How do I really remap myself so that I feel confident?
Well, thinking good thoughts is a good start.
Yeah, but then you got to do something, right?
You almost have an advantage, being a new agent, because you don't have preconceived ideas about what you can't do.
True.
But even an experienced agent that hasn't sold in that market, the greatest part about our business is education can go a long way in place of experience.
Right.
So that's kind of where you start. Now, experience is important. That's why I would recommend, if you're new to the luxury home market and you have some opportunities out there, team up on a couple transactions with an experienced luxury home marketing person, and just shadow that person. And I'll tell you, even if you gave away half of your $1 million listing,
it's worth it.
It would be an education well worth it. But when you go to that agent, make sure and say, hey, I'm going to give you half this listing, but you have to teach me everything.
Yeah, I'm going to take everything you do.
Right. I had to. I have an agent from San Jose that had a place in Blackhawk and called me, and we went up, and it was a multi-million-dollar place, and we're going to list it, and it's going to be a 50-50 type listing. And she literally made me sit there and go, okay, after we interviewed and we went through everything, I had to email her my entire
seller questionnaire,
my listing presentation, seller questionnaire, and everything like that. That's basically what you do.
Right. And I think if you have a sense of abundance about it, right, think of it as your tuition.
Exactly.
Yeah. If you want to. Why'd I go to college? I like to read. I like learning. That's fine. Was I super excited about international business? Not so much. But I knew that if I completed my degree, I got to get interviews that I wouldn't get if I didn't complete my degree, right? So you pay the tuition. Pay the tuition by co-listing with an already successful luxury agent. And be really transparent with them. If they aren't interested, there are individuals like Joe that are willing to share. There are some that won't. If they aren't interested in sharing, that's not the one you want to partner with.
Yeah, and that's certainly not the one you want to learn from.
Right. Correct. Because they're going to teach you how to do it in a short-sighted.
Let me show you the rule of scarcity.
Exactly.
But the other thing too is, even though you don't have maybe $1 million plus listing, go to a couple high-end agents and say, how would you like a free assistant? And believe me,
they'll take it. They'll take one of those.
I mean, it's one of those things where it's the education that you'll get. You could almost pay them, but just by offering to help them out. The other thing, Keith, that Kathy Harrington has done such a tremendous job. It's amazing that the agents don't know what's available to them.
True.
Our distinctive collection, and what Kathy has done with that is beyond the pale. And if you want to really separate yourself, because everyone has a luxury home division. That's why, along with that mindset, instead of saying luxury, say distinctive collection. And everything should be distinctive collection. And if you want to get an idea, obviously there's a number, the International Luxury Home Marketing that we've teamed up with. You can go, and one of the things that I did, even though I've been selling real estate for 36 years, when I saw the shift happening last year, I went out and got my Certified Luxury Home Marketing Specialist designation. I went out and got my CIPS, Certified International Property Specialist, knowing that people were coming from outside the area. So there's so many tools. I mean, agents probably don't know it, but when you list a luxury home, a distinctive home, in the distinctive collection, it not only goes on BHG's distinctive website, it goes on the Wall Street Journal website, and it goes on luxuryrealestate.com website, the #1 luxury website in the world. And most agents don't even know that. And so you have to learn all the tools that we have available just within this company. And then there's other ones, luxuryhomes.com that you can become a member of. And so that's where you have to start broadening your your skill base a little bit.
And as someone with a 36-year career, you're still willing to reinvest and learn and grow and develop your offering as you reattack the luxury market. Is that part of how you made the shift? One of the questions we have is, I'm actually going to get to slide 2 now. It's going to be amazing. You were a short sales specialist, a distressed asset specialist. To reposition yourself as a luxury specialist, you've mentioned the continuing education that you're doing, that really trying to develop yourself. From a marketing standpoint or from a marketplace standpoint, what else are you trying to do to really reposition yourself as a luxury specialist?
Well, there's a couple things. One is, like I said, even after 36 years, I went out and got 2 designations I didn't have before. Even when I was selling homes over $1 million, I didn't have those designations. So the education.
And it's not because you needed 3 letters behind your name on your business card.
I can't even list them anymore because I got 5 designations.
You need a 2-sided card to get through all your designations.
When I was short sale REO, I got 5 designations. I don't even use them anymore. So I mean, it's not about the designation. I'll tell you, it helps you separate. From everyone else out there. But the other thing, if people want to get an idea, I created a second website. And if you want to see my normal website, go to bayhillteam.com, all one word, bayhillteam.com. Then go the Distinctive Collection BHG.com. I created a whole separate luxury home website. Now, if you go to my BayhillTeam.com, there's actually a tab that you can click and go to Distinctive Collection BHG.com. And just look at the differences between the websites. They have the same thing, but in a lot of cases, but they're set up. For instance, if you sit there and just click on the button, say, show me luxury homes, on the Distinctive Collection, only homes priced over $1 million or $1.5 million will even come up.
Right.
Anything below that won't even come up in a search. So agents can go there and see the difference. So I've created an entire brand and a whole new website around Distinctive Collection, BHG.com.
Good. Okay. So we touched on this a little bit, but anything you want to add? Again, this sort of mentorship or apprenticeship, I think, is a great way for newer licensees or someone who isn't a new licensee but just looking to break into that luxury market. Designations you've talked about. Anything else you'd add? A lot of people that are going to be listening to this are going to. It's aspirational, right? I mean, one way to give yourself a raise is to sell the same number of homes, just sell more expensive ones.
Right.
Anything else you'd want to add for an agent that's trying to break into that business?
Now, I would say that get the education,
get
the experience by working with other agents, and just become a sponge out there. And I know one of your other slides is going to talk about costs. So
we'll get there in a minute. Okay. One other piece, and I'd love your feedback on this, is hang out where, look, if you own a home for $1.5 million or $2 million, you're doing okay. Or you inherited it, right? But either way, you're doing okay. So hang out where those people hang out, right?
Sure.
Spend time where those people spend time. If you are, drinking a Slurpee at 7-Eleven, the odds of you running into someone with $1.5 million or $2 million house is a lot less likely than if you start taking a bocce ball or golf. Or if you're really looking to break into this, there's a lot of different ways to do it. But one can be, if you're a good networker and you're good socially, and that's a real skill set that you have that's unique, go spend, do some charitable giving, get on the boards of some charities, really be purposeful about finding opportunities to network with individuals that have high net worth.
Right. One of the things that, there's a lot of country clubs in our area, even just to join as a social membership, you can do it almost for nothing. I personally, I was a member of Black Hawk Country Club in the late 80s, and with 4 kids under 5 years old, I saw that was not going to pan out, and so I gave up my membership and said, well, maybe in 10 years I would join again. Well, 25 years later, last year I joined back, and see, I don't go play with the same 3 guys every time. I basically
go as a single.
I go as a single, and I play with different guys each week, and I've been referring contractors out to these guys. And again, it's putting yourself in the place, like you said. You're not going to necessarily find them hanging out at the 7-Eleven.
Right. And you're right. I mean, if you're not into golf, you can be a social member. If you aren't into golf at all, you could find charities that make sense. There are always philanthropic opportunities to give back, and don't do it just because you want to meet people with a ton of dough. It'll come across weird, and you actually won't do a good job. Make sure it's something you truly believe in, but if it's something that you really believe in and there happen to be a bunch of loaded people hanging out there, that's not a bad thing.
Well, the thing is it's always got to be that.
Rena, who you're going to hear from in a minute, said, and see if any of them are single, which is hilarious. All right, go ahead.
But and you're exactly right. Now, I love golf. And because you have to go in it, because again, you have to remember, what's in it for them, not what's in it for you.
Correct.
And so you have to just be in, like in my experience so far, I've given out contractor leads,
left and right,
up the yin yang.
But you get a name from that, you get a telephone number from that.
They're on my sphere of influence.
They're on your sphere of influence. They're now receiving your marketing. That's someone that you've made an emotional deposit with. It might be 6 years before they sell their house. But if you do what you're supposed to do, which I know you will, then that person will list with you.
Exactly.
From that one golf game. Yeah. Perfect. So what specific skills, how is it different working with a high-end, client? What specific skills? I know you said it's easier, and I kind of believe that. But is the skill set the same, or is the skill set different?
No, I think the skill set, that's why the education and the experience. You definitely have to have a skill set. Here's where you can start, though. if you want to, let's say, for instance, specialize in the market in Pleasanton and Danville, the East Bay.
Right.
For instance, every Thursday, we have a tour sheet on Thursday and Friday between Pleasanton and Danville.
Yep.
The first thing I look for is homes over $1.5 million.
Right.
I go out and look at every upper end home, and then obviously I look at.
They usually have better food anyway.
Yeah, exactly.
Right.
They're catered much better. So I mean, but it really, and that's part of the education process of knowing it. So the skill set we talk about, knowledge can take the place of education.
Yeah.
And that's one of the things that you do. And what you do is you meet other agents at these places.
Right.
You see, how do I even hold an open house? You might have.
What's a broker's open look like at a 2 million?
Better food.
Right.
A better brochure.
Yeah.
I collect the brochures. Of all these homes because I want to be competitive, and I know what type of brochure that other agents are promoting them. So if you go to these broker tours, you basically see how they're being promoted.
Yeah.
And you see how you have to raise your level, to compete with those other agents. So that's all part of the educational process. Just absorb yourself, and if all you do is go out and look at $1.5 million homes, let's say, pretty much you'll then quickly have the mindset of a $1 million.
You'll start to process and experience, right?
Right.
People will believe some of what you say. They'll believe almost all of what they experience.
Right.
And so you go and spend time in that arena, you will have a series of experiences that will teach you how to do it the right way.
Right.
That's good advice. Yeah, especially too, if you're going to make the time, because tour is a time intensive act, right? Even if you just go look at 7 homes, over $1 million, if you spent those hours on the phone calling into your database, you'd get more leads than if you did with that time investment. So if you're going to make that time investment, it drives me nuts when I see agents that are on tour and it's kind of like play day, right? Yeah. Tour isn't play day. Tour is product knowledge day.
Right.
And if you aren't going with other people that are focused on product knowledge, then find different people to go with or go by yourself. Because you're there to learn the inventory so that when you do go play golf with someone and they mention a listing, you've walked it, you know what the inside looks like, or if they live down the street, you have a really accurate idea of value. That's product knowledge day. It's not let's go graze our way through our local municipality day.
Sure. Yeah. And if you get that call for a $2 million listing, to go out and try to preview the comparables
Good luck.
is not easy.
No.
You have to make appointments, and normally they want your buyers to be pre-qualified.
Right.
So you got to see the inventory when the opportunity's there.
Yep. All right, so let's talk about cost a little bit. What's the spend? Is the spend a lot higher on the luxury? How do you manage that? And maybe just a general discussion around it. And then if I'm new and, I don't have any money, the reason I'm at 7-Eleven is because it's all I can afford. How do I marry those two things together?
It's, certainly, as I heard Norman Vincent Peale say at one point, you have to, with a guy that was a trapeze act, was having a hard time, he says you have to throw your heart over the bar first, and it's the same type of thing. You have to take a leap of faith, and you have to be confident in what you're doing, because confidence is one of the, again, if you fill yourself with education, experience of working with other one, that confidence will grow. And you have to have confidence in yourself, because just like my first 10 years of my career and a few years here and there in between that, I've run my business off a credit card.
Right.
And you have to. Sometimes I've run my life off a credit card, but we've all been there. And sometimes you have to say, okay, I'm going to, budget $10,000. Now, you don't have to spend a ton, but your brochures are going to be a little bit nicer. Instead of 50 cents a piece, there might be $2 a piece.
Sure.
Certainly a professional photographer with a virtual tour. To be honest with you, you should be doing those on your tour.
Anyway, any price.
Right.
Agreed.
My professional photographer that emails 3,500 agents and does the virtual tour, posts the photos and everything like that. It's amazing. He might go from $150 a house to $200 a house if it's 6,000 square feet instead of 3. But so it's not a huge cost from that standpoint. Certainly magazines. Sometimes you have to be competitive. So some high-end luxury magazines, which might be $600 or $800 a page. But again, look at the return, the potential return. So you do have to take a leap of faith. You do have to spend some money getting these certifications. I think each one of my certifications, the Certified Luxury Home Marketing Specialist and the Certified International Property Specialist, were about $500 a piece. So budgeted $1,000 for education.
Well, and truthfully, if you do those, you'll spend more on travel and entertainment than you will on the actual certification.
Well, the good part is I was able to do them
locally,
all online.
Right.
Good. And and I think that Kathy's trying to arrange.
We have it available. Yeah, right. We do have it available. So, although I would say consider, especially if you're newer in the business, the networking. Many times I learn more at dinner by being with people who are maybe a couple chapters ahead of me in the textbook. I can learn a lot at dinner, at breakfast, at lunch. And do you use that as a referral network, or are you just focused on securing the business locally as opposed to broadening that network sphere for yourself?
Well, that's why I got the Certified International Property Specialist, which I will tell you, going in, it's probably one of the hardest designations I ever received. It is not an easy one.
Yeah.
But at the same point, it's well worth it. When I was running the REO business, 90% of my listings that I ended up getting were obtained over dinner in another state.
Right.
Going to conferences and traveling around conferences. So if you have the time, it's just more of a time crunch.
Right.
But if I had the choice of flying to Dallas and meeting other luxury home agents and doing the designation there, absolutely, I would go there and network with the agents there and give them your card and send people back and forth.
And that would be part, get that list and market to it.
Yeah,
market to it just like you do any other list that you could get your hands on.
Sure, because you've had that face-to-face contact.
Exactly.
So I mean, a good because you're a reader and have turned me on to a lot of great books. If you haven't read yet, Keith, or the agents haven't read out there, the 7 levels of communication.
Ooh, I haven't read that.
Yeah, it's our 7L.com.
Okay.
And it's an agent that basically the 7 levels, it's like a pyramid. And the bottom level is it's just sending a flyer out from some of the magazine. And the top level is one-on-one. And it's basically you want to stay in those top 3 levels. And it's written by a real estate agent. Yeah. That's the #1 referral agent in the United States. He gets 500 referrals a year.
Wow.
And so it's an unbelievable book, 7 levels of communication.
Somebody write that down for me.
Yeah. So it's a great book.
Perfect. Okay. So marketing spends a little more, not dramatically more. And my guess is a lot of what you develop as a, quote, luxury listing agent, unquote, ends up, you treat most of your listings, if not all your listings, the same. I mean, if you got one that's, fire damage and you got to put a fence around it and, okay, maybe you aren't going to do the glossy flyers for those. But for the most part, even if you had a $650,000 listing, you're probably going to do a lot of the same things that you would do on $1.5 million.
Sure. And the other thing, don't forget, you use those listings. We talk about, okay, it's a marketing expense to do the more expensive brochure. Well, that more expensive brochure, I'm getting an extra 500 copies, and it's going out. I'm using that home
as marketing
for the next upper end home.
And I say this with love and care, but too many real estate professionals run their business on too tight a margin. They really don't spend much for the return that they get. And if most companies, small businesses, ran on the marketing spend that most real estate agents work off of, they would not be successful.
Yeah.
So reinvest in your business. How much do you spend on marketing? And look at that number. If it's less than 10%, you probably aren't spending enough to get the results you want.
Well, you look in the upper end. I mean, if you're basically on an average sale making $10,000, and then on an upper end sale you're making $50,000.
Right.
I mean, spending an extra $1,000 to make an extra $40,000. Right. I don't know. We've got a tax person here, but I can kind of tell you that's probably a good return on investment.
Yeah, I'm not a mathematical physicist. My dad is, but I'm going to go ahead and pick B out of those 2 scenarios. Yeah, right, exactly. So tools. Let's talk about Toolbox. What marketing tools do agents need? And then we'll maybe talk about must-have and then nice-to-have. But just to be competitive, just to be in the game, do I got to go get a new Mercedes, or do I got to rent one when I'm going on a listing presentation? Like, what do I need to compete as a bare bones?
I think, #1, as far as presentation, you always have to look presentable.
Yeah.
But to be honest with you, I don't.
I got to tuck my shirt in.
Yeah. I dress basically like I dress now, whether it's a $300,000 or a $5 million listing. Though when I went out on that multi-million-dollar listing, I checked, make sure my shoes were polished.
Nice, good.
But,
Yeah. Get the scuffs out.
Yeah, get the scuffs out.
Right.
But the greatest part is if you didn't do anything else, just what's available through this company.
Yeah.
At no charge.
Right.
The distinctive collection signs, the material, and you'll see that when you go to my distinctive collection website, I don't have the normal BH&G logo.
Right.
Everything that I put
It's
out
distinct.
in all my advertisements or anything else is all distinctive collection now. So because that separates me from everyone else.
Yep.
So, but there's other stuff. The high-end brochures. Certainly maybe joining for $500 your luxuryhomes.com and becoming an elite agent. Definitely, on realtor.com, having your listings as a showcase listing.
Yep.
Certainly Trulia. We're already a premium listing on Trulia.
Yeah.
So
Just
like
enhance.
I said, I would say that if I had to basically say the top 10 things I'm using, 7 of them were already available to me from being with Better Homes and Gardens Mason-McDuffie, and then I'm just kind of filling in, a few of the other things that help separate me from anybody else.
Yeah.
And someone, if they go to my distinctive collection website, will see those because I actually have my listing presentation
right there
on the website because these high-end people. They're usually D's.
Yep.
And,
high drive.
And if I'm doing a presentation, I'm on page 4.
They're
reaching across, flipping, going faster.
Yeah, got
faster.
it. Yeah, got it. Yeah, got it. Right.
Because time is money to them. So.
Yeah. And as far as I think prepping for it, right? Whatever makes you feel most confident, right? I mean, Joe knows this. I wear a tie for the awards ceremony for this company. And, maybe for a memorial service for this company. Other than those 2 things, I'm not wearing a tie, right? So if I tried to wear a tie on a high-end listing presentation, it would make me feel more uncomfortable than comfortable, right? So be yourself. Just be yourself like, I don't know, the first time you're going to meet your in-laws or whatever, right? Like step your game up 1 letter grade higher. But be yourself. If you don't ever want to wear a tie again, don't start now just because wearing a tie isn't going to get you luxury business.
Right.
Being confident and being competent is what's going to get you luxury business. So
be
yourself. Just be a letter grade higher than what you normally run around.
And your listing presentation should be different.
Yes.
My listing presentation for distinctive collection doesn't have a BH&G logo any place in there. It's all distinctive collection, and it's all wrapped around there. And I actually bind it in a binder,
right?
Where you can heat them up, so it's like a book,
high-end binding.
And they cost me $10 a book, but again, and it's on our distinctive collection letterhead,
right?
So you pay a little bit more instead of paying $2 on a presentation. I spend $10 on a presentation, but
when you go on your look, it's a journey. It's not a destination. Take the best crack at it you can in the beginning, and when you go on your 200th $2 million listing presentation, it's going to look a lot different than the first one you ever went on. But it evolves, but just get it as good as you can and then start trying to go.
Well, that's the thing is just start. I'll be honest with you. My second presentation looked different than my first one. I mean, it's like Tony Robbins say, Kanai, constant, never-ending improvement. You just keep moving forward and getting better and better.
Right. Good. Specifically, tools to market the high-end listings. You mentioned magazines. You mentioned luxury.com. Anything else that you would add in as far as from a tool standpoint?
The websites, obviously, realtor.com, showcase listing, Trulia.com is a premium listing, which we already have, Wall Street Journal, luxuryrealestate.com, which are available to us. Then maybe luxuryhomes.com, World Properties, Proxio is another membership. And the good part about Proxio and worldproperties.com, if you become a member of the International Luxury Home Marketing Specialist, you basically get that as part of that feature. So all of those websites, and the greatest part and the nice part about tying in the Certified International Property Specialist is those websites I name translate listings into 20 different languages.
Right.
So they click on it, and they just click on one of 20 flags, and that listing, the bulk of it is translated. Now, you might never work from someone from another country that uses it, but when you're sitting down on a presentation and you're telling that person with a $3 million home that there's a very good chance someone coming from China and they can go into the websites and translate that listing, that's going to mean a lot.
Yeah. The $3 million person believes that the walls are coming down around the globe and that the world is flat. Right, and that the connectivity has created a condition where it's not just hyperlocal anymore. Real estate's not just hyperlocal, and at that price point, it's probably true. It's not just hyperlocal.
Right.
The $650,000 for this marketplace, right? $500,000 for this marketplace, that probably is hyperlocal. The $7 million listing, the higher you get, the less hyperlocal it is, and the more truly global it is at that standpoint.
Sure. I just read in the Peninsula, a home just sold for $30 million, and it was to a Chinese buyer, and it was his third purchase in the last 6 months, over $20 million.
Yep.
I mean, the money is coming out of there, and for the agents that aren't paying attention, our company is actually building a network, and we actually have someone heading that up with a division going back and forth to China. So, but get involved with that if you want to get involved with this market, because even though you might, I don't speak Chinese, so I can't help them. But
the menu's hard for me.
Yeah, the menu's
after that, the wheels come right off.
I can figure out the Chinese menu.
Yeah, but that's it.
That looks good. but from the standpoint of that, you don't need to. You just have to make sure they're seeing your properties.
Right.
And because we do have a department within our company, if you do get someone, that's where you can bring in one of our agents, because we're a very multicultural, multi-language company, which is great.
Good. Joe, you've given us kind of your top tips here. If you could walk through those with us, just give us point by point on how I can go on to become the #1 luxury agent. I feel like it's that Cam Newton commercial where, like, I'm going to take your job and all of that stuff. But give us the tips and tricks on how to really go and get our foot in the door or continue to dominate the luxury market.
Well, I think we probably covered most of these, but obviously become a luxury home marketing specialist in your mind. And #1 is the way you do that is absorb yourself into it. Absorb yourself into that culture, get educated, and go out and just look at luxury homes all the time and become a luxury home person. It's like I'm sure you've read the book Psycho-Cybernetics by Maxwell Maltz. The famous plastic surgeon that people came to him and were ugly, and he made them beautiful, but they didn't see it,
right? Because
in their mind they were still ugly.
They were still wired.
Yeah. So absorb yourself in it. Get the proper training. Not only within our company. Our company is rolling out luxury home. Trainings that we're going to have. Get the proper training. #1 is just discover what's available within our company. It's amazing what agents don't know that's available through WebTop or Client Connect coming up. It's unbelievable, this stuff. I will tell you, 90% of my listing presentation is pulled right off our website. Learn what's required to market high-end homes. Go out and visit them. See what other agents are doing. Pick up every local luxury home book you can and see who's advertising, how they're advertising, and that will help you there. And then team up with an experienced agent. Obviously, that's education that, even if you help them out for free, just saying, hey, let me help you out. I just want to learn the luxury home business. And like you said, Keith, if an agent, like some agents do, work off scarcity, if that agent is afraid of that, that's not really where you want to learn anyway.
Learn from someone different.
Exactly.
Yeah.
So
cool. Well, Joe, obviously with all that you do, your time is incredibly valuable. So thank you so much for being willing to share a little bit with us and to be here to share your wisdom on the luxury market. Appreciate you taking the time.
It's always a pleasure, Keith. Anytime.
Thanks so much.
Anytime.
So now we're going to introduce someone who apparently wants to
hang out with Joe.
Hang out with Joe, yes, and also find philanthropic singles networking events. I don't know what that means exactly, Irina, but perhaps you could tell us right after you tell us some of the misnomers about unknown pre-existing conditions, although the philanthropic speed dating sounds much more interesting.
Kind of works like this.
Change
the chairs.
Yeah, change the chairs.
Before I go into that really quick, I just wanted to piggyback on Joe.
Yes.
With the luxury homes. We do have a luxury home warranty.
Yeah. Oh.
So anything over 5,000 square feet, you do have to call in to our office to get a special quote.
Got it.
You don't get the regular brochure pricing.
Okay.
With that said,
yes,
unknown pre-existing conditions.
Sounds riveting.
Oh, yes.
Yes.
So the misnomers, basically, I get a lot of calls, and it went back to the REO days and the short sales. Well, we didn't know it was missing this, or we didn't know it was working. We did not have any of the utilities on.
Right.
So people were expecting all these problems that came with the house would be covered with a home warranty.
Sure.
Basically, how I like to explain the home warranty is like getting car insurance. You can't get in a wreck, get insurance, and then expect the insurance company to pay for the wrecked car.
Right.
Okay. So an unknown pre-existing condition, we're trying to get away from that wording and go to undetectable pre-existing conditions.
Okay.
So as a realtor, you need to do your due diligence by either getting a home inspection or do simple mechanical tests. So if you don't have the heater on, get it turned on, have PG&E come out for free and check it out. Or do a simple mechanical test, turn them on. So basically what we're saying is if you did not know and you've done everything you could do to try to see if these are functioning items, then it would be covered by the home warranty.
Okay.
Okay, does that make sense?
It does.
Okay.
So how do I balance all of that, right? So PG&E, electric's not on. If the electric's not on, I can't get the furnace on. I'm trying to get PG&E to come out, but does a home inspection get me there, or like how do I protect my client and myself but still honor the terms of a home warranty?
Well, to do everything that you can. If you can get PG&E out or do the home inspection. If a buyer is purchasing a property as is, they're purchasing it as is.
Yeah, but as is still as is with what I know and what's been disclosed.
Right. So if they're not going to turn anything on and the day they purchase or close of escrow and they go in, turn everything on, and the heater's not working, that did not just break within 15 minutes.
Okay.
So that would be on the homeowner to get that fixed.
Got it. Okay. Cool. And in a normal, quote, normal, non-distressed transaction, how often do you run into this? Is it much?
It's not as bad as it was the last few years. But just to know, because I will hear sometimes out there, oh, well, it was unknown. Nobody knew about it.
Right.
Okay, did anybody turn it on?
And it's sort of, this may not be the right, but it's, probable cause, right? Although that doesn't sound right. But, can you make some assumptions? Is it a 20-year-old furnace? Is it a 2-year-old furnace, right? So making some intuitive leaps and then making sure that you take those intuitive leaps and take them another step or two.
Right.
If it seems like it's an aged furnace, then get the furnace inspected.
Right.
If you did the home inspection and it said other inspector, get the other inspector.
Exactly. Needs further inspection.
Right.
Yes.
Do the further inspection. Right. Good. All right. Well, Rena, as always, good luck with philanthropic speed dating.
Yeah,
and thank you for your
catch Joe.
For your quickie commercial. He's also married. So
no, not him. But
right.
I was going to hold his briefcase when he goes into the listing presentation.
Sure, and he's got some sons. So there you go.
Hey.
All right, Rena. As always, thanks so much. Good
Have
to
a
see
good week.
You too.
Bye.
Now we're going to go from how to make more money to how to not give as much. No, I'm just kidding. We love paying taxes because it's our God-given right as U.S. citizen. Countdown to April 15th. Johnny, you're a broker and a CPA and a real estate professional. You're kind of all of that at the same time?
All that at the same time.
Nice.
Sometimes I wonder which way I should go.
Yeah, right. Depends on the day. Depends on the day.
That's right.
So tax time's coming. We all have to pay our taxes unless we want to go to prison like Wesley Snipes, which we don't want to do. So what should I be doing right now to make sure I'll meet the tax deadline? File an extension?
So, well, that's definitely one route to do it. Right. But if you, regardless what you have to do, the deadline goes, that you need documentation. So one of the things I know is not the most fun type of work that need to be done, but especially in the real estate professional, everybody, for the most part, are independent contractors.
Right.
What does that mean? You run your own business.
Yep.
So documentation, very, very key. Document everything.
I've heard that you are more likely to be audited if you're an independent contractor than if you are not. Is that an accurate statement?
Well,
in your experience?
Yeah, I mean, you will be, right? Yeah. Because you got a lot more leeways in doing certain things.
Right.
And all the marketing expenses, like the jolt on the certification and all the different things, all those are deductible.
Sure.
And
like if I really need my coffee, it's a deduction, right? Like I can't go to work without it.
Can go work without it.
Kidding.
But you're W-2. By the way, I just want to let people know, so we are focusing on independent contractor.
Right.
If you're a W-2 person, that's very different. And be very careful if you're a W-2 person.
Yep.
And even though if you're doing real estate on the side, you're trying to blend in a lot of different things, that's a red flag.
Yeah, if you have I'll add this as someone who I have W-2 income, and I also have decent amount of 1099 income or other income from flips, from speaking, from other companies that I have. Just almost treat them independently. You can't because you got to file one tax return. But when I'm doing mine, there's my W-2 stuff, and that sort of operates in a bubble. And then there's my other income stuff, and that I make sure I do document. And I'm not a paperwork guy, but I better make sure I have the backup for whatever I'm saying, because the odds of, because I have W-2 income plus 1099 income, that is going to give me an increased likelihood of being audited.
If you document it properly and don't do anything crazy.
Well, right.
And also that a lot of time, if people, like in your case, got W-2, potentially you want to set up some sort of legal entity.
Correct, which
to
is
make
what I've
us
done.
separate. Mm-hmm. And by the way, I just want to let the audience know, in case you do have separate legal entity, LLC, S Corp, and so forth, you need to make sure some of those deadlines are different than your personal deadline.
Right. Correct.
So
yeah, the corporate deadlines are different.
Right. It's actually March 17th.
Correct.
For California.
Yes. Yeah.
So
yeah.
Coming up.
Yeah, and if you aren't a legal entity, this is just Keith's opinion. I'm not a CPA, nor did I stay at a Holiday Inn Express last night. But I do think for most of us it makes sense if you get to an income threshold that is respectable, it's going to make sense, in my opinion, for the legal benefit, some of the protections that you get, and some of the tax benefits to go ahead and do it. The cost has gotten down to where it's pretty de minimis. You can no more than $2,000, and you can have an LLC formed, and the personal legal liability benefits and the tax benefits are enough to make it worthwhile.
Exactly. Anybody with certain type of sufficient net worth,
yes,
you definitely want to protect yourself from liability perspective.
Correct.
Even if you don't have LLC, you need to buy umbrella insurance
to
make sure that those liability, we are in the U.S., so
there's
a lot of lawsuits.
There are a lot of lawsuits. So, all right, how much time should I allow to organize my itemized deductions? Because, look, I get paid by selling houses. I got into real estate because I don't love paperwork. Of course, it's very paper intensive, but I don't want to spend my life managing my tax. I want to go sell more houses so I can pay more tax.
Right. It is time consuming and stuff, so you can outsource that if you need to. Have somebody who can have a little bit more expertise.
You mean like a bookkeeper where I just put everything in a shoebox and I give it to him once a month? Or
well, I hope you don't do that. If I'm recommending to somebody who wants my service, I would say, I will translate into something more online and organized.
Right.
I don't want to key it in manually either.
Right.
So that means that you need to have a business checking account, business credit card. So when you run your business expenses and with LLC or whatever, income all in one place that you can download into Quicken, QuickBooks, or whatever,
so
and automatically categorize for you. I don't want a shoebox.
Right. Good. So I work out of my office. What do I need to take advantage of the home office? By the way, let me start with, I should have opened with this. And we may get some questions, which is cool. What about? Here's the deal. And then you tell me your opinion because you're the expert. But you can do whatever you want to do. It's just if you get audited, you might get in trouble, right? So when you get audited, it's going to be how that auditor interprets the code, how your accountant is your advocate, and how those two things come together. In truth, no one really knows exactly what you can or can't do until you get audited. And then when you get audited, they'll be letting you know what you can or can't do. But stay within the confines of reasonable. Work with a tax preparer that can really, truly help you and advise you. And that's been my experience. Do you echo that?
No, I definitely echo that because that, one is documentation. You get something to prove you actually have those type of expenditures or income and so forth.
Right.
But two is just like anything in law.
Right.
It's the degree of reasonableness.
Yes.
Right? How do you interpret? It's kind of fuzzy. Everybody interpret differently.
Sure.
It is subjective.
Yep.
Somewhat, but
yeah. So just
common sense.
Because I get asked, should I take my home office as a deduction? Right. I mean, I'm sure that's one you get all the time. If you ask 10 preparers, 6 are going to tell you one answer, 4 are going to tell you another answer, and the answer they give you is usually it depends, and then after that it depends on, so you won't really know until you get audited.
Well, and also there are IRS put out general rules.
Right.
How do you practice it? So you can't just say, well, I'm a W-2 person.
Right.
And I also like to have a home office.
Right.
And they say, okay, Keith,
right.
that doesn't work for IRS
right.
too
right.
well.
Right.
But in general rule is that your principal place of business.
Yes.
Do you spend more than 50% of time? And a lot of different things. Now, somebody who tax preparer or your tax planner should ask those questions. It's not say, should I have a home office? It's
right.
not yes or no.
Right.
Right. So you kind of probe into that. But to speak of home office, there's a lot of benefit having a home office, especially for us, a lot of independent contractors.
Like what?
Right?
What are some of the benefits?
Well, first of all, on the commuting versus home office, business miles by itself.
Right.
When your home office is your principal business, any miles that you go out of your home right away, that is a business mile.
Yeah.
Business deduction.
Right.
And on top of that, of course, you can deduct your home office itself, the square footage, the percentage, and all the associated deduction, utilities, and all that.
Right.
That's part of it. And matter of fact, IRS just make the rule a lot simpler recently.
Oh, good.
For people who do not want to track of square footage and all the expenses.
Yeah.
They actually just simplify the rule is at $5 per square foot.
Huh.
Up to 300, so maximum on 1,500. So if you don't want to do all that tracking and so forth,
just take the max.
It's just simple. Just kind of like the standard mileage deduction.
Right.
They did that now for the home office.
Oh, good. That does make it easier.
Just came new this 2013.
Rare when the IRS makes something more simple as opposed to more complicated. Is there still time to make an IRA retirement contribution?
So if it's your personal, your deadline is April 15th to tax filing. Yes, you still can do that. Now, you want to consult to your Fidelity, Charles Schwab, whoever they are, their retirement department. Now, there are other things as an independent contractor, especially if you have an LLC or something. You could do self-employee type of contribution. But a lot of those...
Which increases the maximum, right?
Oh, yes.
Yeah,
so you can have employee... There's a lot of benefits doing that. You could have your employee contribution like a regular 401k when you're working for a corporation.
Right.
The employer, which is yourself, you can also contribute part of your net income towards that as an employer contribution.
Right.
And that's all reduction to your income, the taxes. But unfortunately, for some of those accounts, you need to have it open by December 31st.
Got it. But there is still time for just the normal personal IRA retirement contribution.
Correct. So April 15th.
Good. If my clients own investment property, what's the tax benefits of that? What's deductible? What's depreciative? How does depreciation work? Is the land depreciatable? I'm loading the deck, right?
I was going to say that's a very loaded question right there.
I know.
It's complicated with the time, but generally, just a lot of people we all know, clients in a different area who got investment properties. Now, people buy investment property because they think there's good income, there's good things. But there's tax implication and actually tax benefit associated with that. And I do consultation to help people to understand what is that tax benefit. So if you have an investment property, for most people out there, that's not real estate professional. Those are considered passive. You're sitting there collecting rent.
Yes.
You're not managing it and so forth. So there's a special treatment being passive income or loss. Now, there are different rules, and we won't go into it in here, but it's how do you capitalize on that passive loss for a typical non-real estate professional. It's how you generate a certain type of passive income to offset that so you can utilize that loss.
Let me just make one clarification of what you're saying. It's not the real estate professional from the sense of the Department of Real Estate or the Bureau of Real Estate, meaning you do real estate as your profession. This is the tax code's definition of a real estate professional, correct?
That's correct. So there's a certain rule that IRS said, how do you define yourself? It's either yes or no.
And the reason, and again, you're the expert. I'm just the guy asking the questions on the other side of the microphone. But the reason that people want that is because if you can get that, it unlocks a lot of things that help with the tax. I think depreciation speeds up. Maybe not. But I know there's deductions that are available that you wouldn't have access to if you weren't a, quote, real estate professional, unquote.
That's correct.
Yep.
So what happens if for everybody else, non-real estate professional, they're going to should generate an artificial tax loss with their real estate. And you talk about depreciation.
Yeah.
So one of the benefits, just like any business, when you buy a computer, well, it's 3-year useful life. And after that, theoretically, from a tax perspective, that computer is worthless after 3 years.
Correct.
So for your primary resident home, you cannot depreciate.
Right.
That's yours. But for investment property, residentials, you can depreciate over 27 and a half.
Yeah.
So you can generate that expense right up front, except for land,
Right.
as you say.
Right.
Land's never depreciable.
Correct. Now, for us, again, Northern California, a lot of the value is in the land, or not a lot, but more significant number than if you did an investment property, say, in Atlanta, Georgia, or somewhere else where land was a little more abundant. Now, they used to have accelerated depreciation for residential real estate. That no longer exists?
Yeah, I think that was very special circumstances.
Yeah.
So I still, for typically, and you don't raise any red flag,
Yeah.
I do 27 and a half years.
Yep. Okay.
And
And then you do, if you have a positive cash flow from a rental basis property, that counts as income, ordinary income? Or
well,
it
I mean,
depends?
if you have rental income, it doesn't matter if it's positive or negative, that's income to you. And of
Correct.
course, you got all the different deductions,
Right.
the mortgage, your HOA, and all that, property management, they are all deductions for that property P&L.
And if anyone had really specific questions, obviously they could meet with you and you'd help them sort of wind their way through whatever their particular situation is.
Exactly,
Yeah,
exactly. And I also help a lot of investors just to see
Yeah.
what the investment picture look
Right.
like. And by the way, there's not one template that suits all because everybody's situation is very different.
Yeah. And
So-
what are you trying to accomplish, right?
Exactly.
Yeah, yeah.
Exactly.
Yeah. So, okay, last one, because we're running a little tight on time, but when should agents consult a tax attorney?
Well, and tax attorney or tax professionals in general doesn't
Yep.
have to be an attorney per se.
mhm.
So it's all, again, a very individualized situation. Depend if you need to have more tax planning.
Yep.
So right now, a lot of things that you can do for 2013 is passed.
Right.
Except for very limited
That
things.
ship has sailed.
That's practically.
Yeah, yeah.
But for 2014, depends on what you want to do. Do you want to start kind of plan ahead, know what
Right.
the rules are, especially the tax rates are going up.
Yep.
And everybody,
Yes,
they're making
yes, yes, they
$350,000, $500,000 out there. Congratulations to you.
Yeah, thanks.
But then
I wish,
also,
but-
you're a lot of different things that's kicking in that's
Right.
going to increase your taxes. So you want to do some good tax planning.
it also depends on where you're timing in your life, right?
Exactly.
Yeah. So
Exactly.
what are you trying to accomplish in the next 3, 5, 7 years? And how does your tax strategy fit in to what you're trying to accomplish from a fiscal standpoint in the near, medium, and long term?
That's correct.
Yeah. You need a whole picture. If you don't have, as an independent contractor, if you don't have, unless you have a background in tax, please go hire someone. It's worth every penny you'd spend. You will save more than what it costs you.
Exactly.
By hiring a preparer or an advisor to help you with the process. It's worth every nickel you could possibly
Just like
spend.
marketing expense we talked about earlier, right? So you
Yeah.
spend that one extra $1,000, you're going to get the $40,000 in return.
Right, right.
In taxes, a little bit just reverse.
Yep.
You're going to spend that one extra $1,000 or $2,000, but the tax saving that you can have based on your situation,
Yeah.
it could be a lot more than that.
Yeah. Question from the audience. Do you have a simple bookkeeping program that you'd recommend for realtors to help them organize their expenses and deductions? Do you have a specific, you use Quicken, or what do you like from that standpoint?
Yeah, I think QuickBooks is probably Quicken.
Yeah, Quicken.
Quicken's even more simpler.
Yep.
QuickBooks is more for small business type
Okay.
as well. But both of those are very, very good. But then at the same time, you need to set up the infrastructure
Right.
in order to do that. You definitely do not want to key in the data manually.
Right.
That would be, you're ready to go out there and do selling.
Yeah, right. Yeah, you've got more dollar productive activities that you could go do.
Exactly.
All right. Well, Johnny, thanks so much for your time. Really appreciate you sharing your expertise with us today. We can get your information to anyone who's on the show today that might be interested in having a conversation with you, so we'll make sure we push that out.
Just email me or give me a call.
Okay, we'll do. Thanks so much,
Thanks a
Johnny.
lot,
And
Keith.
thanks to Rena for sharing that insight with us about home warranty. And thanks also to Joe for bringing his expertise on continuing to shift your market. Thanks, everyone, for your attention and for listening today. Go out and make it a great week.